started. It's a little after 12. I'm sure we'll have people trickling in as we go. My name is Susan Ellison. I'm with the Office of Visa and Immigration Services, OVIS, along with my colleague Ken Reed here. And we're excited to have Arthur Kerr joining us today for a tax workshop. Arthur is a partner at Vacovec, Mayotte Singer down in Newton, Massachusetts, and an expert in international tax, and has worked on international student issues in the past, so is here to talk with you. And I also want to let you know that Ron Heiser, Director of Student Financial Services here at Dartmouth, who I'm sure many of you know, is also in the audience and can answer any Dartmouth-specific questions you might have. I also want to thank Lauren Miller for co-sponsoring this event, as well as the Dean of Faculty Office and the Thayer School of Engineering. Arthur.
Okay, thank you. Before we get started, I'd like to get an idea of who's here. Depending on your status in the U.S., your tax situation can change. So how many people are students on J visas? How many people are research scholars and not students? Okay. And professors, teachers? Okay. All right, so this is a good mix. I'm going to do some general review of some of the international tax issues we have here for U.S. tax returns. I'm going to skip over some parts. Ask me questions at any time that you want. I'll be here afterwards, too, to answer any kind of questions. And the goal here is to get you to a point where you're comfortable so you can fill out your tax returns for 2010 and maybe plan for your compliance in the future. And it's not going to be super comprehensive here. That syntax program that you have access to is a great program and does a good job for filling out the tax return. So if you know some of the basics as to what you should be looking for, then you'll be okay with syntax. The things we're really most concerned about for all of you is residence first and foremost, what kind of income you're going to get taxed on, whether your treaty benefits apply, what tax forms to use, and then some other tax considerations for people who are in the U.S. for a while and become resident, and then just some of the resources. First and most important thing you've got to ask yourself is, are you a resident or non-resident for tax purposes, not for immigration purposes? All right, and your tax residence is based on your immigration status for some people and days of presence in the U.S. There's three types of resident status: non-residents, resident aliens, and dual status taxpayers. Typically, non-resident aliens are in the U.S. for less than 183 days in a calendar year. Resident aliens are people who have green cards or people who have stayed in the U.S. for a substantial period of time. And some of this may be review for some of you, but I'll go through it. But the substantial presence test is the key for a lot of people in whether or not you're resident or non-resident. Yep?
To ask right away, 183 days in the U.S. during calendar year. Are we speaking of last year?
Of the tax year that you're concerned with, correct, yes, 2010.
So if I arrived after June, I am a non-resident.
If you arrived after July 1st, you could be a non-resident unless, okay, the substantial presence test that I'm talking about has a look-back period and it looks back to prior years. So if you came into the U.S. in July 15th for 2010, you're under 183 days, but there's a look back to 2009 and 2008. And what we do is we take a third of the days from 2009 and 1/6 of your days from 2008, add them to your days in 2010. If it goes over 183, you're tax resident, unless an exception applies. Dual status taxpayers are people who transition between non-resident status and resident status, and it's usually people who are first coming to the U.S. or people who are departing. Non-resident aliens in the U.S. are taxable on U.S. source income only. All right, there's a limited filing status. You can only file single or married filing separate. U.S. source bank interest and capital gains are not included. So if you have a bank account here, if you're non-resident, you have a bank account and it earns $50 of interest, it's not taxable. You don't have to report it on your tax return. Your tax on wages, non-qualified fellowships or grants, business dividends, things like that. And for some of you, tax treaties will apply to some of your income, some of the wages. The fellowships can be excluded, and there can be lower tax rates for some of the passive income like dividends and royalties and whatnot. People who are resident aliens are taxed like U.S. citizens. Okay, that means you're taxed on worldwide income. U.S. Tax is a tax system based on citizenship, not residence. A lot of countries will only tax based on residence if you're living there. The U.S., once you're in as a resident alien or a U.S. citizen, you're taxed on worldwide income no matter where you are, where you work, where your income comes from. You have several different filing statuses. You can file joint, separate, head of household. And importantly, if you become resident alien, there's strict requirements now for offshore reporting. So offshore bank accounts, you have to report if you have a bank account with $10,000 or a foreign financial account, investment account, with a total on deposit or invested of over $10,000, it's reportable in addition to your tax return. If you have interest in foreign corporations, foreign partnerships, foreign trusts, it's reportable. If you receive inheritances or gifts from foreign people that exceed $100,000, those are reportable. So once you become a resident for tax purposes, it's important that you be aware that there's a lot of reporting obligations for your offshore, outside the U.S. assets. So it's worth it to spend some time and learn what those are all about. And if you don't comply, there's strict penalties. Right now, there's a voluntary disclosure program going on that the IRS has sponsored that allows U.S. residents and citizens to report foreign assets that they haven't reported and pay a penalty. And we're working on quite a few of those. Hello.
Just to get that right, I'm here as a visiting researcher from Switzerland on a J visa. Will be here in 2010 for more than 183 days.
Right.
That basically means I need to report also on the salary that I still got from my university in Switzerland and report on all the bank accounts that I have there, or?
Maybe. Let's hold on. Maybe. We'll get to that. Because there's exceptions to U.S. and, right? So there's a closer connection exception, even if you're in the U.S. for, if you meet the substantial presence test by counting the past few years, and you're in the U.S. for less than 183 days, you can stay out of the system for residence purposes. There's also a treaty tiebreaker, and most of the tax treaties that the U.S. has with other countries, if you have strong connections to both countries and you think you're a resident in both, there's a tiebreaker formula that helps decide where you should be paying your taxes. And then most importantly, for the folks here, there's what's called exempt individuals. Teachers and researchers, students, professional athletes, medical visitors, and people who are just traveling through. If you're traveling from Canada and you stop in the US, because your plane stops here, you don't count your days of presence. So, if you are a student on an F, J, M, or Q visa, you are exempt for U.S. from being a resident for 5 years, okay? And it's 5 years, not from the date you start, it's 5 calendar years. Similarly, teachers, researchers on J and Q visas are exempt for 2 out of the 6 preceding years, okay? Notice I say no de minimis presence here. We have a client who came in from Germany in 2008. They're doing research at Harvard. So it's a husband and wife, and they decided to get here early. Their assignment started in January of 2009. They showed up in the U.S. on December 28th of 2008 and blew their first year. That was it. So they had one more year, 2009, where they were non-resident, and in 2010 now they're resident. So it's a pretty strict rule. Okay, U.S. tax, questions, go ahead.
Sorry, just to give an example, so in my case, I came to Dartmouth in September 2005. So those 5 years have passed, and this would be the first year that I could claim as a resident.
Now, you're still on a student visa? There are, if you notice here, it says the closer connection extension. If you're a student and you're gone beyond the 5 years and you're still working on your degree, you can file a statement that you're still closer connected to another country. You're not intending to stay in the U.S. You haven't changed your status. You haven't applied for green card status or anything like that. You just need more time to finish your degree. And typically, this is PhD people because they take forever to finish. And so that's okay. And the treaty will allow it to. You can also use the treaty, the tiebreaker rule in the treaty to overcome that. So there is a way to extend that. You don't have the same issue for researchers and teachers.
So if you're examining, if I'm on a student visa, I wouldn't be disclosing my foreign income, is that what you're saying?
Right. If you're non-resident, you're only going to report your U.S. income, not your foreign income. Right.
So I guess some of the tough students are going to roll off the student visa onto, say, an H-1B. Basically, once they go to the H-1B, that 5 years expires.
That's right. That's right. So once you switch from your F or J or Q and get over to an H-1B visa, you're going to then start counting days as soon as the visa switches. Okay, you don't count as long as you're within the exempt periods, you're okay, but you'll start counting from that day. Yeah. All right. U.S. taxable income. Wages. Wages are U.S. source if you perform services in the U.S. and get paid for them. That's taxable for everybody. There's a foreign employer exception for non-residents. So if you are a student and you are working for someone who's paying you from outside the U.S., that's not taxable. It's not reportable on a U.S. tax return. Your fellowships and scholarships some of them are taxable. It depends whether it's qualified or non-qualified. And of course, other income from the U.S., not interest, but dividends, rents, royalties, that type of stuff is reportable if it's a U.S. source. That's the important part. For your scholarships, which applies to most people here, a qualified scholarship is not taxable, not reportable. Qualified scholarship means you use the funds for qualified tuition and expenses. You have to be a candidate for a degree at an educational institution, and it has to be used for tuition, fees, books, or equipment that relates to your course of study. Non-qualified fellowships is funds that are used for your room and board, travel, and if anyone gives you cash, that's always taxable, regardless of how you use it. Now, Dartmouth should be giving you all, for your fellowships, if it's taxable, they're going to give you a 1042-S, which is a reporting form. It'll have the amount that's taxable on the form. There's oftentimes withholding that's on the form unless a treaty applies. And maybe the treaty applies, you had withholding anyway. It depends what you have on your form, but there's a code to explain what the treaty rate is and how much tax was withheld on your fellowship. Some of the treaty benefits are the residency, like I said earlier. If you're substantially present in the U.S., but you have enough connections to your home country, the tiebreaker clause may help. And for people who become U.S. residents, there is typically, let me back up for a moment. Typically, the treaties don't apply to U.S. residents and U.S. citizens. Treaties are for non-residents that are in the U.S. and for U.S. citizens who are living in foreign countries. But there's a savings clause in every U.S. tax treaty that says the U.S. reserves the right to tax its residents and its citizens as it wants, regardless of the treaty. So if you're from a foreign country that has a treaty with the U.S., but you become resident here, you still may be taxable. The treaty doesn't apply unless there's an exception, and there's an exception for the savings clause for teachers and students in a lot of treaties. Not every single one of them, but there's a lot of them. So you can become a resident in the U.S. and still exclude your fellowship, some wages, depending on the treaty article, from your U.S. tax return. The scholarship and fellowship, compensation for services, those are the items that apply. All right, the tax forms you're concerned with. For non-resident aliens, Form 1040-NR or 1040-NREZ. That's the easiest one. It reports your fellowship income. You need to add to your 1040-NR Form 8843. This is the important one for people who are exempt from counting days of presence in the U.S. The 8843 is a statement that says, I'm here on whatever visa I'm on. I've only been here for X amount of time. I've been in and out of the U.S. for this amount of time. Here's the visa I'm on, and these are the days that I'm exempting. Okay? If you don't have to file a tax return, if you don't have taxable income on the 1040-NR, it's still a good idea to file the Form 8843 to preserve your non-resident status. There's some debate about whether you really need to do that if you have no taxable income. In the past, people weren't paying attention to it, forget Form 8843. But there's been more and more push by the U.S. government for strict compliance with the forms. So it's worth it to go through the exercise. And the form only takes 30 seconds to fill out, 5 minutes. Resident aliens, like U.S. citizens, file Form 1040 or 1040-EZ if you have a simple tax return. The Form 8833 that I referenced there is for people who are taking a treaty position on their tax return. For people who are excluding fellowship income, you don't need to worry about that on your tax return. The 1040-NR has a page where you can put your treaty information in. So you don't need the 8833 for treaties. For fellowship, you do need the 8833 if you're a resident alien and you're taking that exception to the savings clause. You need to explain, I met the substantial, yep, go ahead.
Sorry, I have a question. So I'm assuming these forms are all for federal tax?
These are for federal tax, right.
So I have a question. So I'm a student on F1 visa and I didn't go over my 5-year period yet. I read somewhere, I think it was something related to that syntax, that people in my case shouldn't pay Medicare or Social Security at all.
That's correct.
But I have been taxed on it. That's the first question. How do I claim those two, Social Security and Medicare back? And also, how do we claim state income taxes back? Are there like separate forms? Are you going to talk about it?
Yeah, we're going to talk about states in a moment. As far as the Social Security and Medicare, if you are a non-resident, you're not subject to paying Social Security in the U.S. If that was taken out and Dartmouth did it, that's the fellow. Payroll. Oh, okay, sorry. You want to talk to payroll. They can issue you a corrected W-2. Every year you get a W-2 for the wages that was paid to you for the previous year. They can correct the W-2, refund the Social Security tax that was withheld, and correct their reporting to the government.
So should we contact our employer? Or
Contact the payroll office or your employer. Yeah. Or if you're if it's outside of the university, you should be, talk to your employer about it and their payroll service.
I don't know whether you covered this later on, but I was aware of this form 10918 from Dartmouth, which is for deduction of tuition expenses.
Right.
I'm not quite sure whether that's going to be covered in it.
No,
Is that applicable to students?
the question is whether the 1098T, that reports the tuition that you paid, whether that's applicable here. It is, if you're filing a 1040, you're going to be able to deduct, if you meet the requirements, deduct some of the your tuition expenses as an education expense. Go ahead.
Couple of us have been traveling a lot for the interviews, so we got a lot of expense checks. Do we need to mention that in the
Say that again.
expense reimbursements for the companies?
For who's reimbursing you?
A company, like,
Oh, so you,
for an interview, so they reimburse my expenses.
that's not taxable income. No, I wouldn't worry about that. I wouldn't worry about that. But yes, you can take the deduction for tuition. If you're filling out the forms or doing syntax for your tax return, you'll get prompts for it.
Only on the 1040.
Not on the NR, right, on the 1040. Only if you're resident. So if you're non-resident, then you don't have to worry about it. It's not going to apply.
But if you're a resident and you're a student, so therefore you're exempt, then you're considered a non-resident.
Right,
Then this 1098 is not.
right, that's correct. That's right. Other considerations, state taxes. Here in New Hampshire, it's not a big issue because there's no New Hampshire income tax. In other states, it is. Massachusetts, for example. The state residency rules differ in some states, so California, not California, New York, a couple of the other New England states will follow the federal rules for residency. A state like Massachusetts doesn't, so if you were to take a summer break and go down to Boston and work, Massachusetts is not following the federal rules. So you're going to, if you hit 183 days in Massachusetts, which is not a problem for summer work, but in general, if you're in Massachusetts for over 183 days, you become Massachusetts tax resident, subject to tax on worldwide income. No exemption for being a student. Although Massachusetts will allow a treaty exemption from fellowship and other income, California does not allow any treaty exemptions. Some states will allow foreign tax credits. Yep.
This is somewhere in Mass, so you can claim that tax later.
Yeah. If you worked in Massachusetts during the summer, your employer withheld Massachusetts tax, so you'd want to file a Massachusetts tax return as a non-resident. If you're under 183 days and report your income, and you most likely will not qualify for much of a mass tax, and you'll get most of it refunded.
Can I use syntax for this?
Syntax is, my understanding is syntax doesn't do state tax forms. So you can get the form online at the Mass DOR website, or you can, there's another company, Windstar Publishing. They, I believe, do the state taxes online, but I'm not sure that's true. You'd have to, you can see their website, Windstar Publishing.
So I was doing this online, and I had this question regarding if you spend your summer in New York, so then you were supposed to file whether you were a full-time resident, part-time resident, or non-resident. And since I was there for just like 80 days, I assuming I would be a non-resident.
Yeah, non-resident is if you're in there for less than 183 days and you're not planning to move there. A part-time resident would be someone who moved in to the state but didn't moved in maybe in September, but planned to stay, so they would be a part-year resident, or left the state during part of the year.
And just building on that question on how can you claim back that tax, can you e-file that return? Because some of the tax software like TurboTax, you can pay like I think $20-25 and it will be e-filed for you and then you get a tax return. So instead of manually filling the form as a district.
Yeah, I mean, most of the tax software, has that capability for e-filing, so you should be able to do it. I mean, it's for people who do a lot of tax preparation, it's mandatory for us to e-file when we can. So I would think, and I don't use TurboTax or any of those things, but I would assume they have some sort of e-filing function.
Last question on this. At times you also subjected to a local tax. Is that something which you can?
A local tax, Pennsylvania, Ohio, some places in New York, they have local taxes, local income taxes. A lot of them are just a flat rate tax, so there's no deductions that apply or exemptions or special circumstances. So if you're, it's just X percent based on your gross pay. So a lot of them, your withholdings are taxed and there's no need to do a tax return. If you go to Ohio, that's different. Ohio's got local taxes, they get town taxes, county taxes. They all have their own tax return. Stay out of Ohio, that's my advice. And, you know, look, my last point on this screen is this multi-state taxation. You know, in the U.S., you're dealing with 50 different jurisdictions. You know, so you've got your federal tax, all your state tax returns, except New Hampshire, Texas, a couple that don't have it, and then getting down to the local level. So it can be complicated. Other things to think about, if you become resident, you know, it may not apply to most of you, but if you become resident in the U.S., you're subject to U.S. estate tax. If you are married, you get married here, and you have your children are born here, they're automatically U.S. citizens, and they're required to file tax returns. We have a lot of clients who parents were at grad school in the U.S., went back home to Sweden or something, and 18 years later, junior is working in Sweden, who's a U.S. citizen and isn't filing U.S. tax return because he or she doesn't know about it, but there is an obligation and a requirement, and there's a huge push right now for compliance in this regard. So that's something to be aware of. Same with the U.S. citizen spouse. If you go back to your home country with a U.S. spouse, he or she is going to have a filing obligation yearly. Here's our big mistakes. Failing to file a tax return. Oh, go ahead.
What's the name of the form that we have to fill if we have the new baby born? That was born.
You don't have, it's, the child will only file tax return when he or she has income. So for the, you know, it's going to be a long time. But it's one of those like kind of sleeper things, you know, you forget all about it, and then 18 years later you're working or something and you forget that you have a U.S. tax filing obligation. So the big mistakes: failing to file a tax return, obviously. Filing the wrong return. People don't understand the real differences between non-resident and resident. Using the wrong marital status. We have a lot of people who come into the U.S., they're married, but the spouse stays home, come in to do some studying or a little bit of work and file as single because I'm here by myself, so I'm single. Nope, that's not how it works, you know. Failing to include worldwide income, that's the big one. Incorrectly claiming your treaty benefits. Make sure, you know, treaties are a little tricky. There's some good authority out there. If you try to read the treaty on your own, it's a challenge, you know, and so you've got to be careful with that. And then failing to file other disclosure forms. This is more important for residents, you know, the bank form, foreign corporation forms, things like that. So, resources for you guys. If you don't have it already, the IRS puts out publication 519. This is great for non-residents. This has everything you want to know about filing your tax return for residents, resident aliens, non-residents, and dual status. I mentioned WinStar Publishing before. If you go on their website, and you may not need this stuff, but they put together a couple of really good books on how tax treaties work. I mean, it's soup to nuts on tax treaties, and also books like U.S. Taxation of Foreign Students. So, you know, this is a kind of a general overview that I've done so far, but there's a lot of ways to slice things, like do you have a grant, a fellowship, an award, a prize? Is your fellowship for, you know, is it just to help you do research, or is there an exchange for services? That type of thing. So there's a lot of ways to really slice things finely, and these books can help you out. I don't get a commission for them or anything like that. I'm just passing on the message. So that's a quick overview, and what I'd like to do is just answer more questions if people have them as to what you want to do. Syntax should walk most of you through what you need to know and to get your tax return filed.
And that access code is going out between today and tomorrow via email, so you'll have the login to Syntax, and this PowerPoint will also be available online.
Right, and I put my at the front, I have my telephone number and email address. You know, you can call me or email me if there's any questions.
Do we have to use syntax to file because only 5 million is double tax and
Syntax is a convenience that the school provides to you, so you don't need to use syntax. No, not at all. There is you get a deduction, a standard deduction of, a personal exemption of a few $1,000s. So, it's going to be on the tax form. I can't remember off the top of my head. It's $2,000 or $3,000. Yeah, it is. Right, yeah, it's $3,650, I think is what it is. I might have the form here. It's a couple $1,000s, but you'll see it right on the tax form.
For syntax, is it applicable for a student whose spouse doesn't have a social security number?
If you don't have a social security number or an ITIN, it may not work. You won't be able to e-file it, okay? But if you file it and your spouse doesn't have an ITIN or a social, now, are you filing a joint return or okay. What you want to do is, you can do it manual and they might assign a temporary number for, or they might send you a note and say, we can't process your tax return until she gets a tax ID number. So if she's not eligible for a social, then she could get an ITIN, which is an individual tax ID number. So there's a form W-7 that you attach to your tax return, which would give her a U.S. taxpayer number. So if I was you, I would file it manual with that form attached to it to get her a number. It'll make things a lot easier.
Where can I get those ITIN?
If you look at the IRS website, just Google in Form W-7, it's right there. And it's pretty self-explanatory. You're going to need her passport, some of her information. You need a certified copy of her passport. Attach to the W-7, attach it to your tax return, send it in, and they'll send you an ITIN for her. Yep?
So I have tried to get my tax back for the previous 2 years based on treaties, but I've never got my money back. Do you know any of the possible reasons for that?
So you filed the 1040 NR? Is that? Yeah, and so you had what, tax withheld on your fellowship?
Yeah, and also my on-campus employment.
Okay, and then but you've never gotten a refund check?
No.
Did you fill out the return the right way? Did you get any notices?
No, I didn't.
Yeah, that's strange. So you ought to call up the IRS. And usually what they'll do is if you filled out your tax return wrong, they'll send it back to you, or they'll correct it if they can, and they'll let you know what's wrong. But did you mail it in to the right place? I mean, best thing to do is call the IRS and see if they can track it down. If you call in and identify yourself with your social security number, they can track it down. If you filed your tax return, if you filed your tax return on time or within 3 years from when the tax was due, you'll get your refund. What happens is if people wait beyond 3 years from when the tax return was originally due, then you lose the refund. So you should have plenty of time. Yep.
How do we get payback?
So you prepare the tax return, it shows your income. There's a calculation for what your tax is going to be, if any tax. So you just go through the math on the form. And then on the 1042S, reports how much was withheld. There's a line to report what the withholding was. And if your withholding is in excess of your tax, then the difference will be refunded to you. And they'll mail it back to you.
How long does that take?
If you e-file your tax return, the refund, there's two answers there. If you go for direct deposit, and if you put in the information for a direct deposit to your bank account, and you e-file your tax return, you should have your refund in 2 weeks. If you do a paper file, it's going to take maybe another week or so. If you want them to mail you a check, it could take 4 to 6 weeks, or if you're really unlucky, you never get your refund.
So I had this question: how good is TurboTax or HR Law?
I don't really know. I mean, I assume they're around, I see their ads all the time, so I assume they know what they're doing, but I don't know. We don't use that, so.
I've used both, and I've had no problem. I haven't had any IRS auditors call me or anything.
Because when I was doing that, it said that whether you were entitled to any reform 1099G and 99G, which is unemployment and other government payments of around $400. I don't know whether that's happened.
The 1090, say that again?
There was around credit for $400.
Right.
It was unemployment or other government payments.
Oh, right.
I wasn't quite sure actually whether it's applicable or not, so that's why.
But did you receive unemployment compensation?
No, but
Right.
I'm just asking whether it's really a direct person. I don't think so.
Probably not.
So the software provided by Dartmouth, does that e-file as well?
I believe it does. Does anyone know? I'm sure it does. Yeah, it must, yeah.
I don't know, I heard that the Russians do have to file on paper. I'm not sure if it's right or not.
Oh, that's a good point, too. That's right. The 1040 NRs have to be by paper. That's a good point. Only people using 1040 as residents will be able to e-file. The IRS has not quite caught up with NRs for e-filing. That's good. Thank you.
Is there an income interest from the bank? Should be included?
Say that again?
I got an income interest.
From your bank?
So it should be.
So you had a 1099 for the interest earned on your account? And you're non-resident? Right, so you don't have to include that. Yeah.
How much does it cost to have a tax preparation company prepare all of these for you?
Well, that's a good question. What we do in our firm is, because sometimes with students and everyone, it's pretty complicated. And normally we're doing tax returns that are a lot more complicated. I'm talking 300 or 400 page tax returns. But for students, we do it as a flat rate of $300, you know. And then others, I don't know what they charge. I think H&R Block charges, $250. What's that?
346.
346? Yeah, there you go. So.
I'd be really careful with using an H&R Block tax preparer. They might not have the expertise
I would too.
in their office to do that. Maybe someone around your had to come pretty good, but I would make sure.
Yeah,
Reference
Anything
international student or anything.
H&R Block for international pilot.
it's really tough. For people, not a lot of people understand the international compliance. We had someone came in last year from MIT, and H&R Block, it was a professor, and they got confused, and they said, well, we just recommend you don't file. So I don't recommend that, so we don't do it that way. But that's kind of a hit or miss whether someone in that particular office has international expertise.
If I'm not sure whether I would go over the 2 calendar years, could I just kind of ignore the tax treaty for 2010 since I was here, since I came in September, and then think then choose about using it or not next year when kind of adding the tax treaty?
Yes, each year stands on its own. So for 2010, if you're already non-resident, that's great. You don't have to worry about that treaty. In 2011, then you get to the end of the year and see what your facts are. But yes, each year stands by itself. Yeah.
When's the limit to file?
It's, the filing deadline is typically April 15th, but for people who are on student visas, 1040 NRs, with no wages, you have until June 15th.
The other question, I've heard some of my international classmates here have talked that they have gotten losses accumulated for future years. Is that easy to do if you do like some sort of one of these programs, or you really have to go look for an accountant that will help you?
Yeah, if you have losses that are going forward, you mean business losses or capital gain losses?
Imagine it's using tuition costs and all that stuff to carry forward.
They don't carry forward. No, not tuition. I mean, the only thing that carries forward on losses, it would be operating losses from a business, or if you had capital losses from, buying and selling stocks, which isn't reportable anyway for non-residents. But those are the only things that carry forward, and certain credits carry forward.
By the same token, I mean, a lot of the Tux students basically, had a summer internship. Did they use the tuitions in that year to offset income during the summer internships, or
Can they use what?
the tuition expenses that we paid for, schooling, to offset the income as a sort of technical expense?
Oh, I see what you're saying. No, you can't do that. If you're getting paid for services performed, you got to report that and pay tax on it, unless there's a treaty exception for it. If you file the wrong return, you can, there's a form called 1040X, and that's an amended return. You can fill out the 1040X, put an explanation on it. There's a spot where you can write it in and just say, I filed the wrong return originally. Here's my corrected return, and just give, and then send it in with the corrected return.
That has to be okay for
Yes, it does. Yes, it does.
For the tax treaty, does it apply to the income from outside the school? Do I need to file any other documents?
The tax treaty may, I mean, for some people, you can exclude some wages in addition to your fellowship.
So it's not limited to wages from the school, but also...
Any wages, right,
Any wages.
right. Some of them will have a restriction, though. Some of them will say it has to be wages paid by a nonprofit group. And so look at your particular treaty to see if there's any kind of limitation on it.
I need to file another file to disclose or like state I have that kind of treaty.
Well, what you do is, if we go back to the forms here, you would file that 8833, okay? That's the form. You don't need to do it for fellowships and scholarships, but you do it for wages and other types of income. Someone up here?
The thing about the tuition credit, if you're filing a regular 1040, you can use that credit
Right.
to offset wages. So if you had $4,000 in wages and you're eligible for $4,000 in tuition credit on a 1040 form, that would make your tax zero.
Right.
So,
Correct.
but the non-resident form doesn't.
Right. I mean, you actually have to take what you've paid as tuition, and you'll get the receipt from the university. And for residents, right, you can use that to offset income.
Question about the 8843 always comes to our office. A student even asked it right before you started, do I really need to do this? It seems redundant. We give them the same answer that you did just a while earlier. But what harm could come to people if they don't do it? I mean, can you give some examples of in the future down the road if they become a green card applicant, do something like that?
I don't think it'll hurt your green card application. What it could hurt is if the IRS was to say, you didn't file the form to exclude your days, so actually you were resident, and now you're subject to tax on worldwide income, and you have significant outside the U.S. income. That would be the risk. It's unlikely that that's going to happen, but it's out there. And as they push more and more compliance, it's just a good idea to do it. Yeah.
Just to summarize it, what I gathered was that even those we would use a resident, he would be a non-resident, but we reported as students. So then this is filing 1040 and all.
That's right.
Which is what we want to pay and cannot be defined.
That's correct.
So if I'm an F1 student, I can be non-resident, but if I don't have any worldwide income, and can I claim myself as a resident? Can I just not choose to be non-resident?
Can you choose to
file 1040?
No. That's a good question, actually. We tried to do that for a couple of people because it was, it would help sometimes, but no, you can't actually. If you're in that status, which this is kind of funny too, because they're saying you have to file the 8843, but if you don't, can I claim to be resident? No, you can't. And you can do it, but that would be incorrect. And if the IRS ever examined it, they would change it down the road. So, but.
Thinking about my child again, can I get a child tax credit?
You can get not as a non-resident, but if you can if you're a resident. Yeah, there's some exemptions for children for some non-residents, but typically no.
If we earned income in the U.S. and paid taxes on it here, when we report back in our home countries, do we then have to pay additional taxes?
If you have a tax filing obligation in your home country, that's, then generally no, because what they'll do is they'll give you a credit for the taxes paid in the U.S. You know, for example, when the U.S. people go outside and work elsewhere, you always have to report your worldwide income, but you get a credit for taxes paid elsewhere. Usually that's how it works. But a lot of people who are here don't have a home country filing obligation. You may, but a lot of people don't.
For example, I have a tax treaty, but my income from on-campus didn't hit that cap, so I still have some left. I have another source of income. I should be able to deduct that, use that rest of the tax treaty. Should I still feel the 88.33? I'm sorry, 88.33.
Let's see
I already signed it with school.
What kind of income is it?
It's an intern. So one income is an intern, so my intern, the other is the school like fellowship.
And okay, and the internship, are they giving you a W-2 for it?
Yes, I have one W-2, one 1042S.
All right, so the 1042S is fellowship income, and it's treated different as wages. And so you got to have to look at the treaties usually have several paragraphs, and there'll be a paragraph dealing with fellowships and grants, and there'll be a paragraph dealing with wages. So if so note that difference when you're looking at whether the treaty applies to that income.
If that applies, you need to fill out another form to disclose.
If it applies, you don't have to fill out the 8833 for fellowship and grants, but you do for wages. Okay. Yes.
How about the student loan interest deduction?
Right.
So if I'm a non-resident, can I claim that?
You have to look at the form. I don't recall if there's a deduction on the form. Do you recall if that's on the 1040NR? I don't think so. I don't think so.
I'm looking at 1040NR.
Is it on the front?
Yeah.
Yeah, so there you go. Yep.
So does it mean that if we actually pay some interest for my student loan, I could claim that, or is it like?
Well, you're going to need a reporting form from, if you have it, the reporting form that you paid that interest, you can use the amount that's on that form. If you take the student loan interest deduction without matching it to the form from your lender, the IRS might kick it out because they're going to allow what's reported to the IRS.
Every item I claim for deduction, I need to form.
Not every item, but for student loan interest.
Well, the loan interest, you won't get a form unless it's over $600 to the lender. So if it's Dartmouth, we wouldn't send you the form, but it will get reported to the IRS, no matter what the amount is. And you can see the information the lender usually make available. You can go on the website, you can see it from our site, and if you were borrowing from one of the other lenders in the country, they should disclose it even if it's less than $600.
That's the interest payment, actual cash paid.
Yes.
Yeah, not accrued, paid.
And if it's under 600, and the IRS won't question it anyway, so that's okay.
I have three questions. The first one is, for syntax, does that do all the computations that you want?
Yes. Yeah.
The second question is, because that is going to be made with an entire e-file, the federal taxes for 1040NR, can you still e-file the state tax? In the event that you're not e-filing it?
Well, you can't, with syntax you can't, because syntax doesn't do state taxes, but you could ordinarily, yes, if you're using another program.
And the third question is that once you subject it to the global citizen tax, which has already been deducted and reflects on the W-2, can you get that back?
It depends on the jurisdiction. Some, it's a flat rate. What's that?
A couple of us intern in New York City, and therefore it is subjected, the W-2 mentions that it will be deducted.
What's going to happen is that New York City, the New York tax return has a section on it for New York City taxes. So you'll add it together, and the New York State and the New York City tax gets calculated together.
And then they're going to maybe one single check or whatever.
That's correct. That's correct.
And can that be done on software?
It can, but
what kind of software would you advise if it can be done?
TurboTax can do it, or one of those off-the-shelf softwares can do it.
But the global tax doesn't do the city tax. It just does the state tax.
Are you sure?
I think that's nice there. I mean,
I would look, if I was you, I'd look back at the New York form, because the New York form's 4 pages long, and page 2 or 3 has the New York City's portion on it.
So when I-
So you include it together.
Yeah, so I already
Okay.
but then I got a mail from I might receive my refund by March 1st.
Right, and that happens a lot. They're going ahead and process your tax return. They don't know your facts, so they're just assuming you're resident. Now, your issue is, now they think you're resident. So if you file an NR next year, it may cause a little confusion, and they may question you. They may not, too. It depends, Sometimes it's the government, so you never know whether they're going to be really focused on it or they're just going to let it slide through. I would, once your refund comes through, let it process and get your refund back, and then you can amend your tax return and file the 1040 NR if you want to correct it, which it's advisable to do so.
So I just wait for my
I'd wait till, because otherwise you're going to confuse them. So get your refund. You have 3 years to amend, so you don't have to do it right away. So there's no deadline. Yeah.
At the research scholar and another treaty, so I can claim my bill of income tax back for 2 years, and I choose it yes. What happens? The tax are awoken in 2 months here.
So once you've gone beyond the treaty portion, okay, now you become subject to tax on that income, and based on your days here, you also become resident if you stay long enough.
But I just started. I worked 2 months last year.
Oh, okay, so you just started in 2010.
So I'm a non-resident for that purpose.
Right. You're non-resident for 2010, for 2011, and then you'll be resident for 2012 if you're still around.
So what should I do do I have to file something for the 2 months last year?
Did you get a 1042S for reporting the income to you? Did you receive income for a fellowship?
Yeah, well, I only paid 1 month in 2010.
Okay. And where'd the fellowship come from, Dartmouth or else?
Dartmouth,
Yeah. So you should get from Dartmouth a 1042S that reports, right?
Yeah, they were mailed out middle of the month. If you didn't get it, you might have a bad address. So you
Middle of January?
Call Thayer and they can tell you.
Yeah. Yeah, and whatever's on that form is what you're going to report on your U.S. tax return.
Who seems to be missing their 1042?
There's Gene.
And you want to know, it was mailed out on February 15th, email the payroll office, and we will reprint it for you. We just have an email for you in case there's any address you want us to send it to, okay? And anybody who questions whether they got a W-2 or 1042S, email payroll office or myself, and I'm glad to put it up for you. Okay? I'm Jeannie from payroll, by the way.
Super specific.
Okay.
From an F1 to an H1 back to an F1 now that I'm in grad school. So last year, my substantial presence, because of the look back, I still filed as a resident. But since this is my second year on an F, I think I go to non-resident. What do I have to file, or do I do the dual?
You're on the F as what? As a scholar, research scholar? As a grad student? If you're on the F as a grad student, you still have that 5-year exemption.
So this year I would file the 88 as a non-resident, even though last year I was still a resident.
That's correct.
And so is there a problem? Last year I didn't send 8843 at all.
Well, last year, if you were a resident, you wouldn't use an 8843 anyway. Yeah, sure. Sure.
If you have dual citizenship, then both of those countries are not American. Do you have to worry about tax treaties from both countries, or just the one you're a permanent resident of?
You have to, the one you're a resident of. So even if you're a citizen of a country, we have lots of clients in the city. Say you're a citizen of the UK, but you reside in Germany, and you come to the US, the German treaty applies.
Tax residence is what counts.
Okay, well, any other questions? Otherwise, great. Thank you.
Thank you.